Okay, it is Sunday night, about 6:30. This is Red with RedDragonLeo.com. It is July the 7th, 2013. We're looking at the 60-minute chart on the futures, the ES, and we're not seeing much movement here. But I do want to point out this line here is still technically not been hit. It is sloping down, as you can see, and is coming in probably around 1633. So there could be a little bit more on the upside come Monday morning. And it would make sense actually for them to actually hit it. Statistically speaking, whenever you put in a solid bullish candle pattern where you close at the high, and you really can't tell it on this chart, but and that's because we've got a missing day here. If I zoom in on this, you can see it's white right there, kind of opened and went there. It skipped the day. But essentially, this is the exact same as a candle like this one right here, and that one's on 514. And as you can see, whenever you have a candle pattern that closes at the top and it's up nicely, not a small amount, not 2 or 3 points, but closes solidly up, and we were up like, I don't know, 15, 20 points or something from this area here. Well, there you go, 1610 to basically 1630, so 20 points, let's say, for example's sake. That's considered a solid white bullish candle, indicating that there is a high likely probability that the next business day the market will be open, that'll be Monday, that there will be a higher high put in. Now, is it a guarantee? No, of course not. But most of the time it happens. And so what you would be looking for here is an open tomorrow and to hit this trend line right here, and then probably fail to get through it unless there's some big announcement that's bullish. I would think it's going to fail to get through that, and it's just going to taper down all day long and kind of ride down along that line. So we look at this on a smaller term chart, 10-minute chart. Yeah, we can't really see it because it's not there. But okay, here's an example of a day right here. You kind of went up, you hit this line, you chopped around, and you finally, by the time it got late in the afternoon, you finally rolled over. We could possibly see exactly the same thing happen. You could see most of the morning it chop around and just ride this trend line. Let's get it back on a 60-minute chart. Okay, here's a great example right here. You go up, you hit the trend line, you chop around all day. It literally chopped around. That was 618 and 619. Just chopped around for 2 days, banging on that trend line. Then it finally gave up and collapsed. Of course, the reason for that one here was the FOMC meeting. If you remember, the FOMC meeting, Bernanke basically said nothing positive for the market, and they dropped it like a rock. Now, we've got the minutes being released of that FOMC meeting this Wednesday, but it's the same thing that was said here, nothing new. So I don't value this Wednesday as anything important. Could the market chop around for 2 more days, Monday and Tuesday, before it drops off on Wednesday? Yeah, it could. But considering there's really nothing new being said, it's just the same thing being released from this meeting, then I don't think the market's going to wait to make a move based upon that FOMC meeting. Basically, I think we're going to hit that line, attempt to get through it, then ride it down, kind of similar to what they did here on June 19th. Just ride it down and drop off probably Tuesday, I would think. They might sell off some into Monday's close. It's really hard to say exactly when they're going to do it, but generally Mondays are going to be light volume after the holiday weekend where traders are taking some time off. Not a lot of big positions being traded. So you would kind of think that Monday is going to be light volume, slightly to the downside, positive in the morning to hit this line, and then choppy, and then maybe down to the downside. Ultimately, though, I am looking for a bigger move down coming over the next, let's look at the SPX, over the next 2 to 3 weeks, probably a lot faster than that, a lot faster. Okay, so you can see here we've rode this trend line up. It's been in this trend line, riding it up, and we're coming to a point here. It's got to either break out and go to the upside, or it's got to fail. I personally think it's going to fail. I think we're going to drop back. I think we're going to hit this trend line, drop back for at least a week, and understand that it does not have to go down here and take out this new low just yet. Do you understand that there's no guarantee that the upside is done yet? We could just drop back here, hit this trend line and this trend line coming in around 1600, find some support there, and that might take a week, maybe take into, I don't know, Thursday of this week. And then they could turn it and rally back up and then break this trend line and maybe go up here and try to make a double top right here at this 1665 area right here, or 1655 area. They could attempt to do that. Here's the thing we got to remember. We know that from Alley's sacred geometry that August 12th period is a key period to look at for the markets to turn down into a possible, mini crash move. We know that is a key time period. Also, according to the last post that I did that had Alley's information on it, it was called the Mayan 52-year calendar and significance of the number 13. Okay, that is, you remember, and I'll pull this down for you to look at. Okay, this is all based upon pi and a sacred geometry using, in this case he was using 3,141 days and 8.6 cycle. This is stuff that you're not getting from other places, I can tell you that right now. This is very, very critical stuff. Alley actually told me over a year ago that May and August of this year were going to be critical for the market. This is also some stuff from Martin Armstrong's, and this is, again, my last post, not the post we're on right now, but this is another post. And Martin Armstrong actually pointed to July 12th as well. I'm sorry, August 12th as well. And Alley's pointing to it for his calculations as well. So between Alley and Martin Armstrong and just what we've already put together in the charts, as we can see in the charts, we do believe that there is another move down. This next move down should go down to the 1440 area. And let's look at the current blog that we're on right here. And as you know, I'm sure you already know that these charts I'm doing, whenever I try to put out some type of future forecast, they have a tendency to change, but the overall picture seems to be the same. So from day to day, they could be off, obviously. Nobody gets these charts right all the time, but the overall picture is what you really should be focused on. And you can see here in this chart right here, I've pointed numerous times to this line right here being hit, this 1525 area for this, like a final fifth wave down, and we're basically here. From the time I did this chart, this line is pointing down. We're basically here. It's actually higher than this. It's actually went up to this line. It pierced through this line and is up here. I guess you have to redraw that line, but it's a 1630 area. So that line somehow needs to be redrawn. So that I incorrectly drew that line, but you get the idea. What we've done there is went up, and we come back down, and this is for a final fifth wave. This 1525 area not only is it this major support right here, but there's also the 200-day moving average. So you would expect a move to happen on the 200-day moving average. Come on, go back. Okay, so let's, oops, didn't mean to do that. So basically that's what I am still looking for, is another move down and I don't know if we're ready to have it this week into next week. I can tell you that this week is the week prior to options expiration. According to Mr. Topstep, those guys, they have been in the business a long time, and one of their mentors, a guy they call the Pitbull, if you ever watch any of their videos, it's good to watch their stuff. They had stated that the low is, the low is commonly put in the Thursday or Friday prior to options expiration week. Now, you know we have weekly options now, but that's not the ones they're talking about. They're talking about the monthlies. The monthlies are always the third Friday of every month. And that's the ones that have been open for a year to a year and a half to maybe 2 years. And they've accumulated a lot of positions over time. And the market makers, they have to steal your money. So they have to manipulate it up and down and pin the market somewhere. So they have to suck you in on the short side the week prior to that. That would be this week. So that's why this week, it just depends on how fast they go down. If they don't go down fast enough, they could chop this and hold this at like maybe 1,600 and then turn and go back up into that week and put in some type of high that maybe hits this 1,655. You see, so literally this could be like some type of A wave, maybe a choppy B or something like that, then a C that's not completed. Maybe this is the first wave of the C, maybe down here, I guess it wouldn't go lower than that, but you get the idea. The point being, maybe it turns into a 5-wave move somehow, and it turns into a final move up here to the 1633. So I don't want to rule that out. Basically, what you want to look for is this Thursday or Friday. We want to see where the market is. We want to see if it's broken this and it's headed on down. If it's broken this and headed on down, it's all based upon time and the date and the price level. So we just have to wait till Thursday really to see. But I think Thursday or Friday is when you're going to see the bottom into this market. And if it breaks this 1580 strong before then yeah, maybe we could see it go on down here and break this in some type of capitulation move and go down here and hit the 1625. But it's going to have to move fast, just like it did here. And unfortunately, there's not really any catalyst this week to make it move down that fast. So right now, all I'm looking for is somewhere between 1580 and 1600 on the downside by Thursday or Friday. Then possibly they go back up the week after that, and options expiration. Then they drop back again and finally hit the 1525. That's a possibility as well. Then once they, once that's done, then you could probably expect a move up into August 12th or something roughly, and would start looking again for another short. And this next short is the one that's going to go down to his 1420, 1440 area. And this should be what you would call a nasty crash wave, mini crash. It's not like a full-blown crash, but it's going to be a nasty move down. I fully expect that to happen. When you look over at, I like to look at Ron Walker's charts because he points out some stuff that I sometimes overlook. And so if we looked at his charts, you're going to see basically, here's the reason that I say we could still be going up higher. See the 60-minute chart? This MACD is in the 65, 90 periods and 12. It's so it's a little different than this one here, which is shorter time period. And this one is and I don't know why it still says 65, 90, and 12. It's just a different view. I'm sorry, it's just a different view. It is a different view than this one. Okay, 12, 26, and 9 down here in the MACDs. The longer term time period ones tend to give you a little bit better outlook on how long it's going to last. So you can see it could still go up and get maybe up to 2.5 or even 5.0. That's why I think we could roll over first, come back down here and put in a lower high, then go back up. That's why I said I think we could bottom into Thursday or Friday. Then we could still have one more move up. So that's his chart that you can see right there. Most of you guys know where his charts are, so it's on my blog roll as well. So down, then back up, then down. That's what I'm looking for. I don't have time to draw this. Sorry, the time's running out on me. So But just look for a bottom into a Thursday or Friday. That's all, guys. See ya.